What if I told you that every dollar in your bank account, every loan you've taken, and every mortgage you pay isn't really real? What if money, as we know it, was created from nothing by the very institutions that control the world's wealth? Today, we uncover how banks magically create money and the dark truth that hides behind this illusion. Money is the foundation of our economy, the driving force behind our daily lives. But where does it actually come from? The answer might surprise you. While most people believe money is created by the government or printed at a central bank, there's a much darker secret hidden in the system. Banks don't just hold your money, they create it out of thin air and lend it to you with strings attached. In this video, we'll reveal the shocking truth about how this system works, the history behind it, and the immense power that banks have over our financial future. Prepare to have everything you thought you knew about money turned upside down. Imagine this. You're taking out a loan for a house, a car, or to start a business. You're told you're borrowing money from the bank. But, in reality, the money you're borrowing doesn't even exist yet. The bank hasn't lent you any of its own money at all. Instead, it has created the funds out of nothing, using a process that's as mysterious as it is powerful. So, if banks can create money out of thin air, what does that mean for you? What's really behind the process of lending, borrowing, and even the debt you owe? This idea challenges everything we've been taught about money. But the deeper truth here isn't just about loans or debt. It's about the very nature of our financial system and how the hidden control banks wield impacts every aspect of our lives. To understand the creation of money, we first have to take a look at how the banking system works. The process is far more complex than it may seem, but at its core, the mechanism that allows banks to create money revolves around loans and debt. Money, as we know it today, is the result of centuries of evolution. It didn't just appear overnight. It was born from human need. In ancient societies, people traded goods and services directly in a system called barter. But as societies grew and economies became more complex, the limitations of the barter system became apparent. If you needed a loaf of bread but had only livestock to offer, you were out of luck. Thus, money, first in the form of precious metals like gold and silver, was introduced as a medium of exchange. Gold, with its tangible value, quickly became the backbone of economic systems worldwide. For centuries, the global financial structure was based on the gold standard, which tied the value of money directly to a fixed amount of gold. This was an important step, as it kept inflation in check and allowed governments to regulate the flow of money. However, as economies grew, the limitations of a gold-backed currency began to surface. There wasn't enough gold to support growing trade, and the world needed a more flexible system. In the 17th century, central banks began to emerge in Europe. These institutions, such as the Bank of England, were initially created to stabilize national economies and manage the government's debt. Over time, however, these central banks gained increasing control over the money supply, allowing them to create money without being tied to gold or silver reserves. This marked the beginning of fiat money, money that had no intrinsic value, but was deemed valuable because government said so. Fiat money introduced a radical shift in the way money worked. Instead of being backed by tangible assets, money now depended entirely on trust, the trust that governments and banks would back it. In essence, the value of money was abstracted from any physical commodity, and that's when things started to get interesting. Here's where the story gets truly fascinating and somewhat unsettling. Modern banks no longer deal only in the money you deposit. They've discovered a unique power, the ability to create money out of thin air. This process, known as credit creation, is the backbone of our financial system. When you go to a bank to take out a loan, the bank doesn't simply give you money it already has. It doesn't even need to have that money in its vaults. Instead, the bank creates the money through a simple process known as fractional reserve banking. Let's break it down. When you take out a loan, say a mortgage for your house, the bank creates that money as an electronic entry in your account. The money doesn't come from deposits, and it doesn't exist physically in the form of cash. It's a number in a ledger created when the bank agrees to lend it to you. This money is backed only by the promise that you will repay it with interest. The creation of money through loans is a phenomenon that allows the economy to grow, but it also leads to a buildup of debt. For every loan issued, new money enters circulation. However, the catch is that every new dollar created by the bank also comes with an obligation, a debt. You're now on the hook to repay that loan with interest. But here's the crux of it. The money to pay the interest on the loan doesn't exist yet. It has to be created later, through more loans, creating an endless cycle of debt and new money. This system works because the banks know something you don't. The money they create is backed by the economy's future earnings. The assumption is that the economy will continue to grow. People will repay their loans, and banks will be able to collect interest on the money they've created. But there's a catch. This system relies on constant growth. If the economy slows, if people stop borrowing, or if they can't repay their loans, the entire system risks collapsing under its own weight. Now, let's talk about the darker side of this system. The immense power that banks hold over individuals, businesses, and even governments. Because the money banks create is backed by debt, it means that every time we borrow money, we're entering into a contract with the banks that binds us to their control. Debt is the lifeblood of the modern financial system. Without it, there is no money. Without debt, there are no loans, no mortgages, no credit cards. The economy would grind to a halt. But debt comes with a price: interest. This is where banks truly make their money. When you take out a loan, you're not just borrowing the amount you've requested. You're also agreeing to pay interest, which is the bank's reward for creating that money out of nothing. The more debt you take on, the more money the bank creates. And over time, this results in an ever-increasing amount of money circulating in the economy. But this money isn't evenly distributed. The banks and the wealthy elites are the primary beneficiaries of this system. They have access to cheap credit and can use it to invest in stocks, real estate, and businesses, while the rest of us are left to carry the burden of debt. The rich get richer, while the middle class and poor struggle to stay afloat, often sinking deeper into debt. This seemingly magical process of money creation may appear to work in the short term, but it's inherently unstable. The constant creation of money through debt can lead to inflation, asset bubbles, and eventually, financial crises. History has shown us time and time again that these cycles of boom and bust are inevitable. The more money banks create, the more speculative bubbles form. In the 1920s, the stock market bubble was fueled by easy credit. In 2008, it was the housing bubble, driven by mortgage lending. And today, we see similar patterns emerging in real estate, student loans, and even the cryptocurrency market. When these bubbles burst, it's not just the people who took out loans who suffer, it's the entire economy. Governments, businesses, and households all feel the effects of a crash as the system of money creation unravels. The promise of endless growth eventually collapses, leaving behind a world of debt, unemployment, and financial instability. So, how can we escape this cycle? Some have proposed alternatives to the current system, such as a move away from fractional reserve banking, or even the introduction of digital currencies that could be more tightly controlled. Others advocate for greater transparency and regulation of financial institutions. But one thing is clear: the current system is unsustainable. As long as money continues to be created out of debt, the financial system will remain unstable. Whether we're prepared for it or not, the next financial crisis could be lurking just around the corner. In our modern world, the effects of this system are all around us. Inflation is rampant, with prices rising faster than wages. The cost of living continues to outpace the average person's income, driving many into deeper debt. Meanwhile, the wealthiest individuals and corporations continue to thrive, taking advantage of the cheap credit available to them, while the rest of us struggle to stay afloat. The root cause of these problems lies in the very system of money creation we've been discussing. Inflation, for example, is a direct result of the increasing amount of money being pumped into the economy through loans. As banks create more money, the value of the dollar decreases, leading to rising prices. The average consumer feels the effects of this inflation, as everyday goods and services become more expensive. At the same time, wealth inequality continues to grow. The rich have access to the financial system's most powerful tools, including easy credit and the ability to leverage debt for investment. Meanwhile, the average person is left with fewer opportunities to build wealth, often saddled with student loans, mortgages, and credit card debt. This disparity has led to a concentration of wealth at the top, with the wealthiest individuals holding more power and influence than ever before. Now, imagine being told you're in control of your financial future, only to discover you're trapped in a system where the odds are stacked against you. What if the money you work for, the money you save, and even the money you invest is all based on an illusion? What if one day it all comes crashing down again? Because this time we may not be able to bail out the banks like we did in 2008. The next crisis might be too big, too deep for that. And when the money vanishes, what will be left of the wealth we've been promised? The truth is, the money we use every day is not as real as we've been led to believe. It's a creation of debt, a promise of a future value that could collapse at any moment. We live in a world where the banks hold the keys to our wealth, and it's time we understand the true power behind this system. The hidden truth is out, and now the question is, will we continue to play the game, or will we demand a change? If you're ready to dig deeper into the secrets of money, subscribe to stay ahead of the game.